Hey folks, welcome to the Opening Bell with Dan Frio. I am Dan Frio. We're going to talk about today is how you can capitalize on the markets, making the most money you can, saving the most money you can, and we're going to talk about stocks, crypto, real estate, and bonds. So don't go away. We'll be right back. Okay, so yesterday we had inflationary numbers come in smoking hot, and that crushed the markets. So if you're watching this video, you're either looking for mortgage, you're following cryptocurrency, or you're looking at stocks to see what's the best investment for you guys. And everything got crushed. Well, now today, some new numbers came out and the market's rebounding. So when we dissect yesterday's numbers, it wasn't as bad as I initially thought. So last night I kind of dug into the numbers, and a lot of the inflation was pushed up through energy, which is gas prices, used car sales, and a couple other things. When you basically strip that stuff out and look at some of the nitty gritty details, yeah, it's getting a little hot, but what's behind all of that? Well, a year ago, the world basically stopped. So nobody went out to dinner, nobody flew, nobody went on vacation, nobody stayed at hotels, nobody really did anything. So now we hit that huge low. So now we're starting to recover, and we're recovering pretty darn quick because of, let's also drill back to what are your expenses? Well, if you have a mortgage, you might be in forbearance. So you're not making that $2,000 mortgage payment. So there's $2,000 in your pocket. If you're not working, you're probably getting state and government benefits. It might even be more than you're making now, or was making, I'm sorry. So you don't have a mortgage payment, student loans have been deferred, and you might be possibly making more money on unemployment than you were working. And if you were working and continue to work, you're probably fine. So without making student loan payments or a mortgage, and you continue to work, you have ample funds. So I know there's people struggling out there, but there's a lot of people doing very well. So that's the whole gist behind this. So here's my thought is, once all this subsides, let's go out, it's going to go through September. So September, a lot of the employment stuff's going to end, and hopefully a lot of the forbearances and student loan deferments start to end, because that's just clogging up the system. Okay, so once it gets back to normal, say October, November, December, things are going to start coming back to normal. Then you're being in the housing market at that point slows down a little bit because of building and so forth, because of weather. We're going to come right back in line. I think that's what the Fed's thinking about. So now one other thing is, we want to talk about initial jobless claims. You're going to see headlines right here that kind of caption, and they show good. You see right here, initial jobless claims dip to the new pandemic low. However, there's what they call the pandemic unemployment claims. Those are gig workers. So if you're an Uber driver, or you're a musician at a bar, or you have a little landscaping company that you own, and you do it as a side gig or whatever. Normally in those situations, you cannot or do not qualify for unemployment. Well, now you do under the pandemic unemployment claims package. 700,000 people were added to that last week. So even though the claims, the continued claims are there, initial claims, this is just saying the initial claims, this doesn't throw in the number for the pandemic unemployment claims, which is a whole subsidy of the unemployment claims. So this says initial claims is 473, but we have to add 700,000 to that for this pandemic unemployment package. Okay, so that's what's going on there. But the markets are liking the news so far that's coming out. Basically, a lot of analysts dug in like I did. And then they're also seeing some of these numbers here. So it's a yo-yo right now, but it's going to subside. So I think a lot of the stock market yesterday overreacted, as well as the bond markets overreacted. So you can see we lost about 600-700 yesterday in the Dow. We're already up 500. So that's the overreaction. So hopefully you were able to grab in or buy in at the dip. So the next thing is here, another inflationary gauge comes in hot. The PPI number came in today, and it's 6.2, smoking hot. A lot of that information came, just steel prices alone were up 18%, steel. Okay, so that's another piece. There's also wage inflation. So meaning if you own a restaurant or a bar and you need servers, the servers are making more money staying at home on the new package, the pandemic unemployment claims, or possibly just unemployment claims through the state and federal government. So what do you have to do to entice workers? Got to pay them more. But it's a domino effect. Let's say you have a worker that's been with you for 8 years, and they're a server, and you're paying them $12-13 an hour. Well, to bring in a new person, you might have to pay them $14-15 an hour. What's that mean? Well, you can't hire a brand new person off the street, pay them $15 an hour, have somebody that's working for you for 8 years that you're paying 12 or 13. You got to bump those up to at least 15 minimally. They're still going to be ticked off because they're like, I've been with you 8 years. Now you bring in a newbie and they're getting, the same money that I am. So now you have to drive up their wages. So you have wage inflation. But again, once this subsides, yes, it's going to be hot as hell for the next 3-4 months, but from there it's going to subdue, and hopefully that should bring us back to normalcy. So what's it doing for the markets right now? Well, you saw yesterday everything was red except cryptocurrencies. Well, today everything is green except for cryptocurrencies. So let's go through it. Other than this anomaly right here, and I got out of my bull. This was the NASDAQ 100 bull times 2. So basically this loaded up on the top 100 NASDAQ stocks and purchased them through derivatives and other riskier assets to drive up the yields. I got out of that, but I can't get it off of my screen. I tried to edit my screen and I can't get it off of there. So I'm out of that position. But our staples are Google, Apple, and Facebook. Those are up 1%, 2%, and almost 2%. We go through here. Look at though that what I've been showing you and kind of teaching you on these weird times, the uncertainties. Put it in great stocks that'll capitalize on the infrastructure bill coming out. Berkshire Hathaway is the way to play it. So guys, I am a mortgage person. I don't do stock investments for you. I'm not a wealth planner. I basically do this to educate and entertain you guys. So all the information I give you here is what I am doing. What I highly suggest is you guys go out there, do your own research before you buy or sell any stocks. So that being said, let's get back to the list. So you can see right here, Berkshire Hathaway is up 1%. Okay, that's where I've been just moving my money on a weekly basis into that area. Ethereum is another area where I doubled my money in the last 45 days, and I gave back some yesterday and today. But it's still a long-term hold. I threw money in there. I'm just forgetting about it. But you can go down through here. Let's look at a lot of the ETFs. ETFs are a basket of stocks. So where we're focusing in on right now is energy, financials, and industrials. Okay, so those are the three main areas that I'm focusing on personally, because energy for the infrastructure bill, financials for higher rates and yields, and the industrial, again, that is another infrastructure play. The way to do those or to buy or invest in these areas is through an XLF. ETF. Sorry, I was looking at this XLS. An ETF. What an ETF is just a basket of stocks. Okay, so for example, let's look at what the ETF is for the energy. Well, we looked at the energy sector. Let's look at the ETF for the XLF. So the XLF, if we go into that, and I use Schwab, you go into that, you can click over and check out what their portfolio is. I take that back. Let's what their holdings are. Just to give you an idea what's in the ETF of the financial sector. We have Berkshire Hathaway. Sweet. This is a way to play that as well. You can see they're smart too. They're putting their money into Berkshire Hathaway. But then we have JP Morgan, Bank of America, Wells Fargo, Citibank, Morgan Stanley, Goldman Sachs. Can you see these are financials, huge financial companies. So if you want to get a piece of all this action, instead of trying to find which one of these is the perfect stock for you, buy this ETF, which is XLF, and you're getting all these stocks. Okay, so that's the best play that I would do, and those are the areas I'm focusing on. What's going on in the cryptocurrency today? Well, they're getting crushed. Elon Musk came out yesterday and says, I am not going to accept Bitcoin for Teslas because I think the way those are produced would take up too much energy. That's really weird because he is not a dumb guy, and I didn't think he would cave to what I want to say, politically correct. I didn't think he was going to cave to those out there that are like that are green. I'm not saying good or bad. I didn't think he would cave to it because he knew what he was getting into when he purchased. So now he's spooking the market, and that's just weird. I want to see how this all plays out. But with the positions I hold are Bitcoin. That is basically what they call gold in technology. And that's down 11% for the week. But in Ethereum is the platform that most of these cryptocurrencies trade on. It's a platform. It's a look it up, and it's the best way to I can explain that. It's up 11% on the week. So if you balance these out, I was basically flat on the week, which is fine. I own more Ethereum than I do Bitcoin because I like this platform versus majorly Bitcoin. And a lot of these other ones I really don't even play in their realm because they're too volatile and there's not much there that I like. I'm going to start adding to a position in Cardano slowly because I think this is the next or the backup of Ethereum. So I'm saying it's Ethereum B. Okay, so those are the areas. I'm not going to go into details because you could study this for months and still finally start to get it. So please do your research on cryptocurrencies. What's happening with the MBS market today? Will people follow me every night to see what's going on with mortgage rates? Well, the mortgage-backed security market is up 9. What this is the price of a mortgage-backed security bond. As the price goes up, yields come down. That's how bonds work. The more you pay for a bond, the less the yield. So the more you pay for this MBS, mortgage-backed security, the lower the interest rate on the mortgage. Okay, that's good. Where we fell out is we're breaking through technicals, and we broke through them fast this week, and I'll get to that tonight in my 5 o'clock video. So if you want to learn more about mortgage rates and bonds, please check me out. My video that'll be coming out tonight about 5 o'clock. U.S. Treasuries are starting to sink. That's great news for mortgage-backed securities and the stock market. So if you like the channel, I hope you give me a thumbs up. Let me know what you want me to talk about or dig into. But the best way to do this is give me a thumbs up, subscribe down below, hit the bell so every time I post a video, you get an alert. But what I'd ask you to do is check out my YouTube channel, and it's The Rate Update with Dan Frio. I have over 800 videos, and there should be something there that entertains you. If not, let me know, and I'd be more than happy to do a video for that. So take care, guys. God bless. I'll see you at 5.